listening to the Decisive podcast, insights and analysis to empower confident decision-making.
Hello, welcome to our latest PMI-based podcast from S&P Global Market Intelligence. I'm Paul Smith, a senior economist at S&P, specializing in the production of the Purchasing Managers Indices. On today's podcast, I'm joined by two other economists. Firstly, hello and welcome to you, Andrew Harker.
Hi there, Paul. Good to be back on the podcast for our final episode of the year. One of the things I'd like to talk about today is our sector PMI offerings, particularly some new country sector data sets that we've started publishing recently, and people will hopefully find those interesting.
Sounds great, Andrew. And secondly, we're also joined today by Maryam Baluch. Hello to you, Maryam. Good to have you with us. Which topics are you going to be talking to us about today?
Hi, Paul. Thank you for having me. I'm excited to be on the hot seat finally. So I'll be talking about ASEAN manufacturing and some of our latest releases, the broad sector data and CSI, Consumer Sentiment Index.
Fantastic. Great. Hopefully it's not too hot a seat for you, Maryam, today. So I thought it'd be good just to set a little bit of scene before we get into the latest debate and discussion. I think since our last podcast, which was recorded in September, global economic growth as measured by our JP Morgan Composite PMI has been broadly steady compared to that September reading. So growth still a little bit below trend, characterized really at the moment by modest demand growth and a slightly softer labour market. But on the plus side, inflationary pressures are broadly contained. There's still a little bit of a gap between what I'd call subdued manufacturing performance and private service sector growth in terms of output, orders, employment. And that weakness in manufacturing is quite evident in the United States, and especially so in the Eurozone, where challenges related to energy, competition, trade, structural factors are all tending to weigh on performance at the moment, especially in the region's traditional industrial powerhouse economy of Germany. Now, I think that implies perhaps that things are a little bit better, relatively speaking, elsewhere for goods producers around the world. So growth in India continues to power ahead, whilst in China, output is rising modestly and actually at its best pace for 4 months in October. Japan remains in contraction territory, but only just and not to the same extent as the US and Eurozone. Now, I think just staying on that kind of Asia theme, as we can look a little bit more towards some of the smaller economies in the region. And Mario, I'm going to throw this over to you. Maybe you could just give us an overview of what we refer to as the ASEAN region.
Sure, Paul. So the ASEAN Association of Southeast Asian Nations, PMI, covers Indonesia, Malaysia, Myanmar, the Philippines, Singapore, Thailand, and Vietnam manufacturing. When we look at the headline index, ASEAN's been pretty stable lately and compares favorably against the global manufacturing PMI, which has shown contractions in recent months. The ASEAN manufacturing sector is seeing slight improvement, with the PMI holding steady at 50.5 for October. Demand has been on the rise since March, especially during the summer months, allowing manufacturers to boost output. On the prices front, things are easing up. Our PMI shows input and output prices are rising, but at a slower pace than usual, and notably down from those post-pandemic highs observed in 2022. It doesn't therefore come as a surprise that more ASEAN central banks are following Vietnam's lead in cutting interest rates. However, digging deeper reveals a slight cooling in demand lately. Additionally, the PMI suggests that growth has mainly been driven by domestic demand as trade conditions worsen, which aligns with our global trade picture. In fact, new export orders across the region have been declining for nearly 2.5 years. Moreover, supply chains are still stretched, though not as badly as during the pandemic, but resulting in this reliance on stockpiles to meet demand. Also, when we look at the country breakdown, the picture is quite varied. So, Myanmar and Malaysia have been holding back the ASEAN manufacturing sector, but Indonesia also falling into this underperformer category. On the flip side, we have Singapore and the Philippines as strong contributors, who in recent months have at times been accompanied by Thailand and Vietnam. And I'm sure, Andrew, you'd like to jump in and share some insights on what's happening in Vietnam lately.
Yes, thanks, Maryam. I did think it would be good just to update people on what's been happening in the Vietnamese manufacturing sector, given that they suffered the impact of a typhoon back in September. Just to recap, Typhoon Yagi made landfall in Vietnam on September 7th, I think it was, caused widespread disruption, a lot of damage to factories, a lot of flooding. Very sadly, it was the largest storm to hit Asia this year so far. Very sadly, it led to hundreds of people dying and billions of dollars worth of damage as well. We were able to see in our PMI data for September the impact that the typhoon had on the manufacturing sector. So we saw sharp reductions in both output and new orders as the damage to factories and the extensive flooding really hampered operations, limited the ability of firms to produce goods. Similarly, there was issues with transportation. So supplies delivery times lengthened sharply, again, often linked to the flooding and just the difficulties of moving goods around. Those issues getting hold of inputs meant that stocks of purchases actually fell at the second sharpest rate on record since we've been doing the Vietnamese survey since 2011. So the only time we've actually seen a worse month for stocks of purchases was at the start of the COVID-19 pandemic, when much of the world was in lockdown. So really quite a severe impact in September, particularly in that part of the country in the north where the typhoon hit. But if we look forward to October, we've got October data now for Vietnam as well. We can see that a recovery has got underway. So we've got renewed increases in output and new orders. Now, there's still some lingering impacts from the typhoon, particularly with regards to supplies delivery times, transportation still affected. So the rates of growth that we saw in October are still some way off what we saw prior to September, when the sector had been growing really strongly. But hopefully now we can see a recovery getting underway, and that'll start to build in the months ahead.
Thanks, Andrew, for that extensive overview of Vietnamese manufacturing, and you, Maryam, as well, for that great overview of developments in the ASEAN region in terms of its manufacturing sector. Now, I wanted to highlight some data sets this month which listeners may not be quite as aware of compared to maybe our more traditional, shall we say, manufacturing and private service sector splits. That's something that we refer to as our broad sector data. I'm going to come straight back to you, Andrew, if that's okay. And maybe you could just give us a quick outline and overview of what those data sets entail.
Yeah, absolutely. So maybe it's good to just go back and look at what we've traditionally always published for sector data-wise. So normally people might be aware of our detailed sector data, which is available at the global level and for Europe and Asia. So that's where we really drill down on the responses that we get from panelists each month and split those data sets out into really quite detailed sectors. We haven't really done that too much at the country level up until now. We've done sector data for the US, but now we're expanding this out to 9 other countries across the Europe and APAC regions as well. So we're going to have 10 countries for which we've got broad sector data. So not quite as detailed as you can get at the regional level, but we're talking about sectors like basic materials, consumer goods and services, financials, industrials, technology. We'll go through a bit of what these sectors entail over the course of this discussion. But it's important to note that those new data sets at the country level are going to be available at the same time as the respective services and composite data for those countries. So you're going to get a real sort of good insight straight away in terms of what's driving trends at the national level within the sectors. And so those data sets are available now if people want to subscribe to them. So yeah, it's worth having a look, I think.
You probably guessed what my next question is going to be, Andrew. You've already hinted there a little bit. Could you maybe give us a little idea of what the latest data is showing, perhaps as we started earlier on today, starting globally and kind of funneling down, if you like, into some of the nations or regions that we've got within that data set?
Yeah, sure, I can do that. So yeah, we go back to the global data and look at some of these broad sectors. The one that's growing best at the moment globally is financials. We're talking about banks, insurance companies, real estate firms, amongst other things. And so that sector's been performing pretty well. In October, it's the fastest of those broad categories. And now if you look at the country level, where the growth's been coming from, Spain is leading the way there. Saw very strong growth in October and was the best for almost 2 years. But also the US and Italy performing well in terms of financials. So a good spread there. But then if we look at the other end of the scale, it's the basic materials sector, which has been struggling really to generate any growth for some time now and continuing on into October. When we talk about basic materials, we're looking at metals producers, chemicals, wood producers, those sorts of industries. And again, we can, now that we've got this new data, we can drill into which countries are driving those trends. We can see that output in basic materials falling pretty sharply in France. Also, the US. So we've seen the sharpest decline in basic materials production since February 2023 in October. Germany, Italy also struggling as well in that respect. You notice there, I've mentioned some of those countries like the US and Italy, both in terms of the best performers in financials and the worst performers in basic materials. It really goes to show that dichotomy that you were talking about at the start of the episode, Paul, between manufacturing services, really well illustrated by this sector data. I think you can see sort of financials really representing the service sector powering ahead, whereas basic materials on that more manufacturing side struggling.
Yeah, absolutely, Andrew. Maryam, maybe I can bring you back into the conversation here. And I'm quite interested in what's going on at the moment in more consumption-facing industries and sectors, given that's such a key driver of modern economic growth. Andrew discussed there, we cover consumer goods, consumer services. How are these two sectors performing, Maryam?
So consumer goods covers consumer electronics and automobiles, for example, and consumer services encompasses media and tourism and recreation. So here we're looking at marketing companies, restaurants, and etc. And both the sectors saw modest growth worldwide in October. However, these sectors are not the main engines of global growth, showing more moderate expansion rates and generally landing near the bottom of the rankings of the 7 monitored broad categories, suggesting the squeeze on household budgets and generally a cautious spending environment. Regionally, consumer goods have been a significant drag in the Eurozone, largely due to the struggles in the automotive sector, but this wasn't so much the case for Asia or the US. In fact, when we look at all 3 Eurozone countries, Germany, Italy, and France, saw their consumer goods sector take a hit. Germany was hit the hardest, continuing a decline that started in the second half of last year, with the recent rates of contraction being among the most marked since the pandemic months. This downturn can be linked to struggles across the German car manufacturing sector, a rapid shift to electric vehicles, which was hit by this sudden halt in the government subsidy program, plus facing tougher competition from other countries, meant that output has been scaled back notably. On top of that, the outlook for the next 12 months looks gloomy, as highlighted by a PMI future output index, which posed below the neutral 50 mark.
That's great, Maryam. I think, talking to some of those structural challenges that we spoke about when we were talking about the Eurozone economy at the start of the podcast. I think this discussion on consumption is quite a nice link into our final topic really for today. It's a little bit more of a focus on consumers and their current behavior, something that we predominantly, of course, with our PMIs are focusing on businesses. It'd be great maybe to look at something a little bit more in the consumer space. Unfortunately, we're a little bit limited in what we can do here, but we do have a survey of households in the UK, which we can dig into. And coming back to you again, Maryam, here, maybe you could just give us a little bit of an overview of what we call our consumer sentiment index for the UK, maybe give us an idea of some of the data history, how often we're releasing that data, and what kind of questions and indices that we're actually collecting data for.
Sure, Paul. So the CSI, the Consumer Sentiment Index, is our sole household survey from the PMI team. Slightly different from our typical business surveys as it focuses on consumer confidence across the UK. We collect data monthly involving a panel of 1,500 UK households and have been doing so for the last 15 years. But like the PMI, this is still a diffusion index, so 50 signals no change on the month prior, and readings above 50 signals an increase or improvement, readings below 50 signals a decrease or deterioration. The CSI tracks consumer financial well-being, labor market conditions, household spending, saving, and debt. We gather these insights by asking households a series of questions. A few examples include their perceptions on current and future finances, changes to job security, income, savings, plans for major purchases.
So a real holistic overview of how consumers are behaving and feeling at the moment. Now, the survey and the release of the CSI in October, of course, occurred before the UK government budget, which was at the end of the month. I'd be intrigued to know what the data was saying in terms of household confidence, maybe in the few months since the election until just before that budget occurred in late October.
Households have really been feeling the pinch post-COVID, especially with the cost of living crisis weighing heavily on finances. Cash flows and savings have taken a hit, and many are putting off big purchases. But there was this silver lining recently, particularly after the election in July, when the CSI hit its highest point in over 3 years. Since then, confidence has retreated slightly in the lead up to the autumn budget, but the index is still close to July levels. A key driver of confidence has been the labour market, which has been a shoulder to UK households since the second half of 2023. All the sub-indices, job security, income from employment, workplace activity, have shown solid improvements, helping to ease some of the pressures on households.
And I guess I'm not going to ask you to get your crystal ball out or anything like that, Maryam, but when's the next set of data available, given that's going to be that first release since the budget happened?
Our upcoming release is scheduled for Monday, 18 November. It will provide some of the first insights into UK households following the budget. So definitely one to look out for. With new government policies set to launch next spring, creating a dynamic landscape, particularly regarding the labour market, it will be interesting to see how households have reacted. What's more interesting and exciting is the range of cohorts this data offers. It's a rich data set with a lot of history that allows for a deep dive. So we can break these insights by age, sector, like public versus private, homeowner status, and much more.
Yeah, that's definitely something to look out for, and really great timing given when this podcast is likely to go out. Should only be a couple of days away, or of course if people are listening to on their Monday morning commute or in the office on a Monday morning, that data hopefully will actually be readily available. So please go search out the CSI on our website if you can. Of course, something else worth looking out for in the coming days will be our Flash PMIs, which will help us get a sense of the impact of the US presidential elections on business economic performance. That was something that we, of course, spoke at length on our previous podcast in September, and the potential impacts from the election on economic data. So date for the diary for Flash data is November the 22nd, with numbers out for Australia, Japan, India, France, Germany, the wider Eurozone, the UK and the US. So that's lots to look forward to in the coming days. But for today, all that's left for me to say is thanks to Maryam and Andrew for their contributions, and we look forward to discussing some more PMI related developments and topics in 2025.
Thank you for listening to the Decisive podcast from S&P Global. Please subscribe and join us for next week's episode. Until then, stay curious and stay informed.